Hello friends, welcome back to the next session on general insurance and reinsurance. Now let's begin or continue with our learning. In this particular session, we'll be dealing with or understanding a case study on GIC, that is General Insurance Corporation of India. Now what are the various learning objectives or takeaways from this particular session? We'll be understanding the GIC's long-standing presence in the insurance market. That is, how GIC has established its footfall into the market concern and what are the various roles, responsibilities, and activities it has performed over a period of decades. We'll also be studying the GIC's performance reports over the years with the statistical data. So in this case, the various statistical data of the performance of GIC, that is General Insurance Corporation of India, will be studied with and it will be analyzed. And lastly, we'll recognize GIC as an important market player in the insurance sector, that how GIC is playing an important or major role. Initially, now beginning with the concept of reinsurance. Reinsurance is a term which has been coined by various persons for reinsuring the business company. So, the insurance which is taken by the insurance company for insuring their business is called the reinsurance concept. The reinsurance is always taken by the insurance company for protecting or mitigating the risk of loss that may occur over a period of time. So here in this case, whenever we say that the risk of loss is into existence, the insurance company also want to mitigate or reduce or minimize the loss that they are going to suffer. So in order to reduce that particular loss, what do? They take an insurance policy and accordingly, the insurance company itself is taking the insurance policy from some another insurance company. Now in this case of an reinsurance, there are three type of parties. The three parties have been involved. The first is the insured person, the second is the insurer, that is the insurance company, and the third is the insurance company, that is the reinsurance company, who is providing the reinsurance contract. In case of an reinsurance contract, the insurance company is called as a cedent and the reinsurance company is called as a ceded. So here in this case, for example, if I have taken an insurance policy from LIC and accordingly in this particular case, myself will be an insured person, LIC will be an insurance company, and if LIC has further taken a certain reinsurance contract from XYZ Company Limited, then XYZ Company Limited will be an reinsurance company. So now let's move towards our case study. In this particular case study, we'll first deal with the background of GIC. The GIC, that is General Insurance Corporation of India Limited, has become the Indian reinsurance company after the liberalization of the Indian economy in the year 1972. The GIC, that is General Insurance Corporation of India, is called as one of the major contributor or one of the major participants in the reinsurance contract because it undertakes it undertakes the transactions or activities only in terms of reinsurance contracts. The key goal of GIC was to maximize monthly subscription and retention in the local market. So the GIC was aiming at to provide maximization and goal of a certain concern wherein the profits will be shared between the various industries, companies and the insurance agents. Due to this concern, the subscription of monthly nature was supposed to be increasing stage. Gradually, when the burden or the load of the insurance company is shifted from one position to another position, it can focus on only one single activity, that is acquisition of client and providing the better or qualitative services. So for this particular concern, GIC came forward and accordingly they have started to acquire the various insurance contracts in terms of reinsurance which has been taken by the insurance companies to get the best possible terms taken into account the nature of the business that has been surrendered. So in order to see that the best possible outcome, best qualitative services have been provided by the insurance companies to the insured person, the GIC has started to provide the services to these different types of vendors, reducing the amount of foreign currency that has been lost. Now, at a certain stages in the scenario of 1960s, 70s and 80s onwards, the Indian economy has lost the huge amount of foreign currency. So, in order to increase our foreign exchange reserves, the GIC played a major important role, wherein the various participants or the members of The insurance companies and the insured person was also being tried to motivate it and mitigate it about how the loss that they are going to suffer or they are going to incur will be shared and will be controlled over a period of time. So controlling of losses by the various companies was also been essentially required, and hence GIC played a major role. GIC has majorly focused on the concepts or insurance industries or activities with respect to petroleum, telecommunication, and financial risk. On the other hand, they have also covered the risk of losses to the tune of 90% or more. So here in this case, what we can see that GIC is playing a major contributor or role to the high energy goods and material sector or the heavy industry sector, wherein the amount of investment or the amount of rate of return is bit higher, and accordingly the amount is also increasing gradually day by day. So for protection of the rights, protection of the investors, protection of the insurance, protection of the companies, and to see that the risk of loss is being minimized to a greater level, GIC played a major role. GIC was acting as a controlling or the parent agent for four of the public sector private firms. So these various public sector private firms, the GIC played a major role as acting as a parent or acting as a mediator or a controller for all those organizations, overseeing the reinsurance business operations until it was recognized as a nationwide. So what happened? GIC was been established and it was been recognized as the nationwide reinsurance broker. So in case of an reinsurance, GIC's name is taken in the first list, and accordingly it is coming as, or it is being portrayed as a prime participant in the general insurance or the reinsurance business. The major naming that comes in General Insurance Corporation of India. Each insurance created in India would include a mandatory cession of 20% to GIC. So here in this case, any of the insurance policy or the insurance company which is into existence, the major contributor or the participant's role that has been played by GIC is almost up to 20%. And hence we can see that 20% profit margin or the ratio is always being shared by GIC in each and every contract or each and every insurance policy that has been shared. Now let's look at the various statistical data of the year 2017 with respect to the leading IPOs. Now, the 10 biggest IPOs in 2017 with respect to the issue price, we can see here in these particular stages, the statistics of GIC is at the higher stage, wherein GIC's IPO was been fulfilled or been subscribed to the tune of 11,372 crores, wherein the other participants, that is SBI Life Insurance, ICICI Lombard General Insurance, AU Small Finance Bank Insurance, Avenue Supermarts, and so on, it has been decreased or been lower below the 5,000s also. So here in this case, the GIC plays as a major or the leading role in terms of IPOs also, which was been launched in the year 2017. Now, what's the reinsurance status of GIC? GIC being the prime regulator or the sole controller of all the reinsurance business activities, it has acted as a market leader at all the levels, following the various deregulation policies. That is, with respect to the laws that have been framed by IRDAI, the various guidelines that have been provided for the brokers, merchants, agents, intermediaries, and so on, GIC has played an important role in post 1972 and post 1999, that is, establishment of IRDAI and the other regulatory bodies which are into existence. So GIC acts as a major market considerator. It has liquidated its most of its direct business operations from the year November 2000 onwards, and now GIC is specifically focusing on the concept of reinsurance only. And hence we can see that the General Insurance Corporation of India, that is GIC, is been considered or it is been viewed as the major participants in the reinsurance business. It is having its business operations in Indian origin as well as the international locations or international offices or regions also. Simultaneously, the GIC is having its multiple nationwide or international partners for conducting its business operations. Now, GIC maintains a hull pool on account of the marketplace, which obtains an unconditional surrender from writings and the firm. So here in this case, GIC, in coordination with the various firms, participants, mediators, it is also conducting various activities, and based on those concerned, the activities have been controlled, regulated, and governed. being the major participant or the role player in terms of an Indian economy. GIC is acting as a prime leader, and all the rules, regulations, bindings that have been made by the GIC and by the regulatory authority, that is IRDAI, are being completely fulfilled, and accordingly the compensation or claim settlement of all the insurance businesses is being done at a very speedy and quick level. In respect to the portfolio concerns, GIC is been dealing with all the types of portfolio which is into reinsurance. It has appointed its various brokers, agents, multiple contractors, third-party administrators, insurance surveyors and loss assessors, and so on. And accordingly, through these modes or intermediaries, GIC is conducting its business operations. Now let's have a snapshot at the GIC's performance with respect to the various indicators. In terms of the gross premium collection for the financial year 19, it was 44,238 crores, whereas in case of financial year 20, it has increased to 51,030 crores. The net premium collections of GIC was around 38,996 crores, which went up to 46,655, which is almost increase in the 8,000 crores. The incurred claims that was been raised to the GIC was around 33,740 crores in the year 2019, which went up to 43,035 crores, which is almost 7 to 8,000 crores, a bit higher. Underwriting profit, now here in this case, we can see that the underwriting profit of GIC is at a increasing or a decreasing stage with comparison to the financial year 19 and 20 or 20 to 19. That is, it was around 2,211 crores in a negative form, whereas the underwriting profit has increased to 6,336, which is a negative profit in terms of GIC. The investment income that has been generated by GIC in the year 2019 was 6,401 crores, and in the year 2020 was 7,125. The net tangible worth of GIC has decreased from a certain percentage. That is, in the year 2019 it was 23,358, and it has been decreased in the financial year 2020 to rupees 21,902 crores. So these are the various snapshots with respect to the statistics about the performance of GIC, that is General Insurance Corporation of India. Now let's look at the concern of percentage of premium that has been collected by classes of business. In terms of the motor insurance, GIC has collected the premium of around 19.6%. In terms of agriculture, the GIC has collected the premium of around 31.3%. In terms of fire insurance, GIC has collected the premium of around 20.5%. In terms of health sector, around 13.1%. And in case of marine and cargo, aviation and engineering, life and other types of insurance policies, it is below 5%. And hence, we can see that GIC is a major contributor in terms of the agriculture sector, then the fire sector, and then the motor sector, and hence GIC is been performing in a better position for payments of premium, that is a premium, that is percentage of premium that has been collected. Now let's look at the quarter wise solvency ratio of GSC. In terms of GIC, in terms of the quarter 4 financial year 20, the performance of GIC was around 1.53%, that is the solvency ratio. In the first quarter of financial year 21, it has decreased to 1.52, and in the second quarter of financial year 21, it has increased to 1.63. So here in this case, we can see that post the COVID pandemic 19 situation and the consideration of all the industry and regularizing of the economy, lifting of the lockdown of the second phase, accordingly, the GIC has again boosted up its considerations, and accordingly, the performance of GIC is increasing at the higher rate. Now let's have a look at GIC's institutional report. GIC institution, that is as an institution, offers reinsurance directly to the insurance companies and the Indian market reinsurance firm. So when GIC act as a mediator or act as a link between the insurance company and the insurance agent, it provides direct support to the insurance companies as well as to the insurance mediators and the various brokers, sub-brokers, agents that have been appointed. So GIC's institutional report suggests that all the insurance contracts that have been there under the purview of GIC are being settled on time to time, and the claim settlement is also done at the maximum level. GIC is always entitled and is usually entitled to 10% statutory concession on each and every policy subject to certain restrictions. Now, these particular concessions have been provided in consultation with the IRDAI, that is Insurance Regulatory and Development Authority of India, in contribution with the some involvement of the central government. So, an entitlement of 10% statutory concession is always given to the GIC, and hence the profitability percentage is sometimes increasing and sometimes decreasing. Now, these particular restrictions are being always laid by the state government, the central government, the various respective regulatory authorities, and the respective insurance companies. Now, GIC at the forefront of the several domestic firms, treaty programs, and faculty positions. So, GIC has tied up an MOU with various organizations for promoting the insurance business, for seeing that the insurance is being created at a very lateral stage and everyone is getting aware of those concerns. In our previous lectures, we have seen that there is very less percentage or margin or awareness in terms of health insurance. So, GIC identifying those particular norms or consideration takes various measures for improving the awareness in the minds of an individual, and always seeing that how the insurance industry will be in a beneficial or in a better stage, and the involvement of the people, or that is the general public, in terms of GIC, in terms of insurance, in terms of reinsurance, will be increased over a period of time. So now let's look at the concern of how do we solve this particular case study. Now in this particular case study, there are certain issues that are needed to be found, that at a particular stage, in this particular slide we can see that in a certain consideration that the gross premium is increasing, whereas the net premium is also increasing, and the incurred claims to the GIC is at a very stable rate, that is 33,000 to 43,000 is a bit increase of 10,000 crores in a particular year, whereas the underwriting profit margin of GIC is at a negative position. That is, earlier it was 2,200, now it has gone down to 6,367. So what's the reason for the performance? Another concern, the investment income. So in comparison to the premium that has been collected and the incurred claims that has been raised with GIC, that is a difference of in net premium of around 8,000, and the difference in 10,000 of the net income claims, the net investment income of GIC is not increased proportionately. From 6,401 crores to 7,125 crores, the GIC is at most benefiting of around 600 to 700 crores only. And the net tangible worth is also decreasing. Whereas in case of the other considerations, when the statistics was into existence, we can see that for the year financial year 21, the performance of GIC is increasing, that is 1.63% solvency ratio. So there is a certain situation we need to understand that what's the performance analysis. There is a certain issue, and that particular issue may be with respect to the COVID-19 situation, wherein the number of claims of the people is always increasing at a very higher stage. Now, considering the scenario with respect to the motor, agriculture, and fire as the major participants or the components or the premium collection centers of GIC. So in this case, there is a loss of agriculture in this particular period, that is the financial year of 2019, 20, and 2021. So in this particular year, with the impact of COVID-19 situation, the business, the output, the productivity, everything was being lowered down, and the agitation of farmers with respect to the agriculture bill that was being implemented, and accordingly, the overall national productivity was being reduced. So with this particular concern, which can be the might of one of the reason, the profitability of GIC must have been reduced. The claim settlement system with respect to the investment income and the tangible net worth of GIC must have been reduced, and those projections can have been gone down. In case of an fire insurance, there were certain issues with respect to the environment considerations, certain concerns with respect to the health insurance policy, that is 13.1%. Major number of policies that was being raised, the claim that was being finalized was with respect to the health insurance. Now, in case of the previous scenario, if you refer the statistics, the percentage of health insurance premium collection was around 1% or 2% or beyond, not beyond 4%. But in case of 2020, that is the financial year 2020, the health insurance premium payment has been gone up to rupees 13.1%. So in this case, we can see that the health insurance percentage margin has also been increased. The lack in agriculture facilities or promotional activities was also been reduced, and the motor insurance was also been increased at the higher stage. So now what's the solution, or what will be the probable outcomes for the suggestions of the revival of GIC? In case of an GIC, we can come to a certain conclusion about how the company needs to undertake various measures, or the institution or the corporation needs to undertake various measures to protect the rights of this particular or organization which is having a national repute. GIC being the primary regulatory authority, that is the General Insurance Corporation of India, working under the direct regulation or control of IRDAI, various measures, suggestive measures and remedial measures are needed to be taken by the state government and the respective central government for looking after a certain concern wherein the business performance, the track record of GIC is always at a better position and it maintains its dignity and goodwill in the society. So now let's summarize what we have learned in this particular session. From this particular session, we have understood and learned that how GIC is working, or how GIC is performing as the prime reinsurance player into the Indian market. In terms of the Indian economy, GIC is one of the sole regulator or one of the sole participant or the major participant in terms of the reinsurance business. We have also seen with the performance of GIC over last 20 to 30 years and how it has been performing according to the need, want, and desire and requirement of the economy. The number of claims, the number of policies that it is dealing into, and how the solvency ratio of GIC from the year 2019, 20, and 21, it is at an increasing stage. And we have also dealt with the current scenario or position of GIC with respect to the specific year of 2020 and 2021. I hope you must have enjoyed this particular learning. Thank you so much everyone for your patience listening. Here we conclude with this particular case study and the module 5 of general insurance and the reinsurance. Thank you.